This is Mike from Mike Chong Consulting, and this report is a weekly projection report that calculates your cash position on a weekly basis, um, and it's calculated using a bunch of variables that you need to input into the spreadsheet. So on the first page here, what we see is a report that's weekly. So you have the weeks up here, um, and you have your. Uh, it starts with your cash position, your expected cash in the bank, how much money you expect to get in receivables that week, your pipeline projection for that week, your accounts payable, outgoing, any recurring expenses you may have, and credit card expenses. And at the bottom, what you have is a sum total of uh, that that number, right? So you take your cash position and basically sum everything up. Now the next cell up here basically takes the balance from the previous week, and then again enters all of the totals for each category into here, into the spreadsheet cells, and then at the bottom it takes a sum and then does the same thing, where it then again takes a sum and starts over. I've used this in my own business, and I found it to be within 5 to 10% accurate, sometimes perfectly dead on accurate, depending on the week. And it's a super helpful tool in order to understand what your cash position will look like 2, 3, 4 weeks out, even when you're, so you can plan accordingly, or you can um, modify payments out as needed depending on what your cash position and receivables look like. Now, in each tab, there's a different item that's highlighted in yellow. And the items that are highlighted in yellow are what you should be updating. So, for example, 25,000. This is cash in the bank, so this is the amount of money that I have in my bank accounts right now that's available to me. Let's say it's 50,000, right? And I go back to my summary report. It's now updated the first cell B2 to 50,000, right? And then all of the um, balances have been updated as well moving forward. So the way I like to use this report is I'll update it on a weekly basis. So that way every week I have an accurate picture of what my finances look like. The second one is receivables. So we have a category. So receivables that are not posted. So anything where the transaction has occurred, but the funds have not hit your bank account yet. So for example, I have Stripe, but it could be any credit card processor where the transaction has occurred, but the transfer has not occurred. So you're waiting on the funds to be transferred from your processor. Stuff that gets paid via PayPal, but you're waiting for the deposits, Square, any checks that you may have received, go in here. Now, open and unpaid um, is any open invoice where the payment has not occurred yet. So let's say you have people on net 30, you're waiting to get payments from them. You take the sum of the payments that are owed to you and put that number here. So if I change that number, let's say I got paid for a whole bunch of stuff, and now it's 17,000. It goes back into the summary report. Now you might be like, why am I not seeing 17,000? The way that I've constructed this report is that it assumes that if you look at receivables B2, um, it assumes that everything in receivables B2, which is not posted but has occurred, is going to be deposited in the current week. And then it takes a factor of 4, so 4 for 4 weeks, so it's assuming that you'll get paid on your receivables over the course of 4 weeks. So that's why it says receivables B3 divided by 4, and that's why you see the same number here, here, here. For me, I just project out the same number of receivables, and then I kind of just update it. And the 5th and 6th weeks I would say are not that accurate, but within weeks 1 to 4, you'll find this report is pretty accurate. Now, pipeline projection. This is the projected amount of sales that I think I'm going to have in a given week. And typically, I use my Salesforce CRM to track this. So I look at how many opportunities do I have in the queue at a given time, and then we apply a percentage to each opportunity based on the level of confidence. Now, I take that number and I'll punch in numbers against my dates. So like for the week of March 23rd, the stock market just crashed again. I don't think I'm going to make any sales this week, so I have a zero. I actually don't think I'm going to make any sales next week, so I have a zero. But hopefully on the week of the 6th, when all the stores reopen, you know, then I'll start making money again. Hopefully, when people come back. So I put 7,500 and 10,000, but you can put 5,000 if you want. You can make it whatever number you think it is, um, based on your historical trends. You can also look at what you did this year, um, 365 days ago, and put in that number of your expected gross receipts, right? Um, and that information appears here, so everything gets copied in. Now, oh, so let me just modify this so you have a good picture of this. So let's say, so this shows you how that works. So this is 500 plus 4250, basically. And 4250 is 17,000 divided by 4. Your pipeline appears here, and then you have your accounts payable numbers that appear here. So these are just for example. You can replace them with all your own vendors. So we have some vendors, and we have rent, sales tax that gets paid out. It has the week that it's expected to get paid on. So you need to enter the amount that you expect to pay this week. So if you have $500 you want to pay Midwest this week, you put that in there. This column sums up everything and then puts it back in the summary report. So you just punch in the numbers that you have to pay out, and it sums it up for you. Now, um, that'll all these numbers get summed up in the summary. Again over here. Sorry, again over here, under accounts payable, you have recurring expenses. So, like, again, update the things that are in yellow. Um, Payroll. Let's say you're locked into payroll for this week, but you're going to cut payroll next week. But let's say instead of being 5,000, you decide to keep one person, so it's 6,000. You can update that in here, and then that reflects in your report. I've also included under recurring expenses any leases that you have for your equipment that's going to get debited ACH from your bank account, and any payments that you might have to outsource vendors as well. But let's say we're going to we're using them now, but we're going to cut them to 500 because the I want to just try and conserve some cash. That'll again also just be reflected in your recurring expenses, right? And the last thing is credit card payments. We have a list of accounts. You can plug in here your expected payment for the month that's going out. Again, it totals up over here. How many payments are going out on a given week, and weeks are listed here. And then again, it's updated under your credit card payments. Now, in this report, I've also included a subtotal of all the payments that are going to a specific account, right? It doesn't have to be necessarily what's been scheduled, but also you can put in like if you expect to pay 500 off of this week, you can put that in the report. Um, and it gives you a total balance. So you have to plug in your total balances. I'm gonna make this yellow. Um, Gives you total balances. You can update your balances, and then what it'll do is it'll actually show you a sum total of my balances, the total of the amounts that are being paid out on a given week, and they'll give you the amount that's remaining after you submit all your payments. So it basically subtracts the payments from your account balance and tells you how much money you still owe to your credit cards, right? Now, once you've updated all of these tabs, you'll have an accurate representation of your financial position on a week by week basis, ballpark, within, I feel like, a confidence level of 90%. um, down here every week. And like I said, what you want to do is on a week by week basis, go in, update your cash position, update all of your financial information again, and get a new picture of what you're looking like. For some of these, let's just say, uh, let's do this one. So like if I was going to update this report, what I would do is I would copy this, paste it here. I would update the date, like just by pulling it down, and then that will actually then be updated in my report. So the other thing I want to do when I'm updating the report is I want to take my dates, update them, and just stretch it a little bit, right? You can do the same thing in the credit card tab. You can copy these and paste it, and then also drag down to your date. Um, anyways, this is brought to you by Mike Chong Consulting. If you have any questions, hit me up on Facebook. You can find me at facebook.com/Mike Chong Consulting, MikeChong.net, or you can email me at info@merchmonster.net. Happy to answer any questions that you have and support you during this time.